Good morning all and welcome to today's video. So I hope you had a great weekend and I hope you are refreshed and ready for the week ahead. So I have three pairs on watch today. Those are euro dollar, dollar yen and pound yen. I've just switched pound yen in exchange for euro kiwi just because it looks a little bit more likely to provide an entry by the end of the day. So without further ado, let me break these pairs down for you now. So my favorite of the bunch is euro dollar. So why am I looking at this on the higher time frames? The narrative as I see it on the weekly chart is that we have this last exchange of liquidity here, where last time around, once this volume was created, there was a big move to the upside, a very impulsive move to the upside, and we didn't really get any sharper pullbacks until here, okay? Until all the way up here. How did we tap into that area? We tapped into that area by way of this three-touch structure. Okay, we have the first touch, second touch where we kind of near miss to this area, and then price. We do get a bit of impulsive momentum, but we also get this kind of three touch or this 1, 2, 3 wave middle section before the move down to tap into this area of volume, and then we aggressively move to the upside. So that gives me a clue, because this is a completed piece of structure, this 1, 2, 3, which taps into an area of volume. That gives me a clue that we don't at this moment in time need to come down to here, because it's a completed piece of structure. Okay, so if we just hide the doodlings, get rid of the doodlings from the chart, we then have, after we have this impulsive move to the upside, we also see another psychological pattern. So these are all psychological patterns which we are looking for. And what do we have on the flip side? And on the slightly lower degree, we have an area of volume here. Okay, volume was built there, and what happened? This is the key bit. I've been studying my trades over the weekend, so although I know what I'm doing, and although I'm very confident in what I'm doing now, I'm still learning things, just like all of you guys and girls that are watching this. And one of the things that I learned over the weekend about my past trades, okay, is not just that my winning trades tend to be at these when prices tapped into these sharp areas of value, and when there's been a bit of a sharp runoff. But one of the things I noticed is that my winning trades in particular tend to happen when there's not just been a sharp sell-off, but when the pullbacks on the way down have been what we would deem to be, those of us who trade the Falcon strategy, a reliable sequence of corrections on the way down. So when the pullbacks, just as with when I'm looking for a trade, tend to be not more than about 50% of the length. When the corrections don't tend to pull back more than 50% of the length of the move after an area of value was created. When I've been, for example, looking for a short here, my trades tend to play out. That's when when most of my winning trades have occurred. So, as well as just looking at these areas of volume and how price reacted from the area, I'm now also looking at how price pulled back on the way down, because for the reasons just previously expressed. So we have this area of consolidation. There was a sharp runoff, and also price didn't pull back very deeply on the way down. This was a reliable sequence of corrections. Okay, so how did we tap into that area? We tapped into that area by way of this 1, 2, 3. As I've said previously, we have this FOMO channel here. The second leg, we have a second touch that breaks above the first, but doesn't tap into the area of volume. The third touch does break above the second touch and taps into the area of volume, and then we sell off. Okay, and one of the other things I noticed is that when we have these sharp sell-offs and the moves don't pull back, we have a reliable sequence of corrections on the way down. I've noticed that that's more often than not when we see these FOMO moves. Okay, almost as if these people that FOMO'd here know that this is the area of value and are kind of looking at it the same way as me, but they're just not patient enough, many of them, to wait for it to get to this area. And that would tie in with why we say that, trading is 90% or 80%, whatever you want to call it, psychological, and 10-20% technical. Okay, so then what happens? We come down, we have near misses. So as well as these near misses to here, we also have near misses here. This one near misses to here, this low near misses to here, and eventually we usually take them out. So what happens? We have this aggressive runoff, we then tap into that area. So just as with the flip side of what I've been saying, right? We have this sharp move here. We have a sharp move down followed by a sharp move up. But look how price moved up last time around. Once it moved from this area, it pulled back sharply each time. Okay, so it's no surprise to me, therefore, that when we did break below here, and I've talked about how on the higher time frames we usually break below before we move to the upside. We've been moving up in a kind of non-progressive way. So the last time that when this area of value, the sharp area of value was created, we moved up in a non-progressive way, and then we tap into it, and then we move up in a non-progressive way again. Okay, so this is one of the things that I noticed over the weekend as well about my trades. When price taps into an area, it will usually replicate. It will usually move up or down in a similar manner to how it moved up or down when that high or low was created last time around, if that makes sense. Okay. So that's one thing I'm paying closer attention to. Okay, so we have the same thing again. I've just zoomed in. So we had this move here. We also have an exchange of liquidity here. Okay, how did price move down? It moved down sharply. Okay, with these little tight pullbacks, and then it doesn't pull back. I don't believe more than about 50%, just over in this instance, about 60%. But we have a reliable sequence of corrections on the way down. What happens? We tap into that area again, and we move down in a kind of reliable way again. Okay, so if I just drill down here, tight corrections, we have a little bit of a retest of this area here. So we have this kind of reversal structure. We do have a sharp pullback here, but that just looks like a retest of the back end of that. But then we see these tight corrections, which don't pull back very deeply into this slightly larger correction. So we have a reliable sequence again, just as we did last time when this area of consolidation was created there. Okay, fairly reliable sequence of corrections. So price replicating itself once again. So what do we have here? Price impulses down below this low. I'm not too concerned about this volatility wick, but we break to the downside. We break impulsively. We have this potential impulse correction continuation, and if we measure the impulsive leg and we assume that the continuation leg out of that is of a similar length, that would take us down to here as a first target. Okay, and we have this kind of sharp move here. Okay, and price moves up and it doesn't pull back that deeply. We have a sharp pullback, but it doesn't pull back more than about 40% of this move, so it makes sense why we might gravitate towards here, especially when we have this near miss to here. As I said previously, that might give us we may get the move down to here and then a push up to the upside where we kind of see this kind of structure, okay? And then we take out this low afterwards. But that's, as I said previously, that was in a previous video, that's just super long forecasting. But the important thing is that we've moved to the downside below this low, and we have a sharp move up, followed by a sharp move down, which just so happens to kind of be retesting these lows here, okay? And that kind of ties in with what the DXY is doing, the dollar index. Okay, so what I'll be looking for is, I also like the fact that, just to touch on it, we have this 1, 2, 3 last leg. 1, 2, 3. Often these are completed moves, especially when, if we just measure them, the continuation leg out is of a similar length. That takes us up to here. Okay, so if we have a 1, 2, 3, which lines up with an area of value, that's often, this 1, 2, 3 is often a completed move. And you see it's kind of not committing from here, and one of the reasons that might be is because if we flip to the DXY, the dollar index, you can see that we've kind of not quite tapped into this low, which is retesting. What's it retesting? A sharp move. Okay, these sharp moves where there's likely orders. So it may be the case that the DXY is pushing back down to tap into this area and break just below it to wash out all the orders before moving to the upside, which on the flip side would mean that euro dollar would push a little bit higher before moving to the downside. But regardless, we've tapped into that area now. So what I have done, so what I'll be looking for from this pair, just put the forecast back at the top of the chart and put this dude back up there. I'm just going to take that off the chart. What I'll be looking for is price to push down. Okay, I'll be looking for price to push down and give us a 1 hour push down. So I want to see a solid push down on the 1 hour chart to confirm that the liquidity here has been washed out. And then I want to see a 15-minute correction. So a correction, a 6 to 8 15-minute candles. Okay. Once we get that, I would filter this. That's usually the banks and the bigger players stacking the order. I would filter this on the 5-minute chart, and if the 15-minute flag was structured, okay, so if we got a 2-touch as a minimum, 2-touch tight flag which was structured, I would take a risk entry on the 5-minute chart and look to get short down to this area. If I don't manage to get the risk entry within the flag, if it's just consolidation where I can't see structure, then I would look to get short on the break of the flag, and I'll be able to manage it down to these lows for something in the region of 5%. And of course, if we kept going for that higher time frame target down to here, then there's about 15% on the table. Okay, so that is euro dollar, and that is what I'll be looking for from that pair. So I'm going to speed up. I spent a little bit too long on that pair because I wanted to go into a bit more detail. And I've flipped my bias on this in previous videos. You'll know that I was a little bit more neutral on this pair. Okay, but what do we have here? I was previously looking for shorts, and you might be thinking, why are you looking to get long on dollar yen if you're looking to get short on euro dollar? Well, the dollar yen tends to have a bit of a mind of its own, as we say, those of us who trade the Falcon strategy. It moves a little bit more independently of some of the other dollar cross pairs. But the reason I'm looking at this one is because if we just zoom out, we have what on my data at least is an all-time high here. We tap into this area, but we don't break above. These highs such as this, which are really significant, we usually break above them before the bigger moves to the downside, okay? And you can see that we have pulled back. This is the other thing. The other clue is that we have pulled back about 75% of the move. When we pull back that much, it's usually the case that we will take out this high again. And the reason we're likely doing that, or likely to do that, is because we didn't break above this high last time around, okay? And the other clue, there was other clues along the way, which is why I was more neutral on this. Look at these sharp pullbacks. I've just been talking about the pullbacks, okay? Whoops, wrong tool. I meant to use this. We have sharp pullback. Not so much here, but here we have a sharp pullback, sharp pullback, sharp pullback. Usually that's the case, is that the reason that happens is because people are trying to sell this whilst the orders that are still up in this area and being placed in that area are dragging price up. So that also ties in with the possibility that we're likely to break the high before the bigger moves to the downside, okay? We also, just to touch on it, we also tap into this sharp area here. We have a sharp move down followed by a sharp move up. If I just drill to the 4 hour, it might be a bit more easy to see. So we have that sharp move down, sharp move up. And what happens from this area? We move up in a reliable sequence with these little tight corrections into slightly larger correction, but they don't pull back more than 50% of the move. Here, they start to pull back a little bit, but that's probably because this move is running out of steam because it's approaching an area of value. But we move up very aggressively from here, and we tap into it by way of a 3-touch reversal structure, okay, which then moves to the upside. And then we see, a kind of reliable sequence of tight corrections into this kind of running channel. And now we have, so this is a nice reliable sequence for a move to the upside versus this, which wasn't, okay, which also ties in with the fact that we're likely to break the highs. Okay, so what I'll be looking for, you can see that we're kind of retesting. What are we retesting? We're retesting this area where there was a very sharp sell-off with no pullbacks at all until we got all the way down to here. Okay, and we've broke this area now. We broke above it, okay, which gives me a clue that this is perhaps just a consolidation to take price to the upside, okay? Otherwise, if we were going to react from here, we would likely just broke above and broke back in. We didn't do that. So this looks to me like we're just retesting the back end. What do we have here? Just got to speed up. We have an area of consolidation where there was a sharp move, okay? And then we came back. We near missed to this area, and we've near missed to it again. So what we might be doing is pushing up a little bit like that and pushing down, okay, before that move to the upside. And then we would kind of have this 1, 2, 3 touch structure. I won't be looking for risk entries in this instance from the edge of structure, just because we've already tapped into the highs on the higher time frame. And I'm not a fan of taking risk entries this far into a move anyway. Okay, but it's not really if we had a bit more, clear cut, if this structure, if we did have a bit more of a clear cut structural move into this, then I would be more inclined to take the risk entry, but I'm not too bothered about that. What I'll be looking for is the following. I'll be looking for price to tap into this area, and then on the flip side, I'll be looking for, once again, we will likely, if we tap into this area of consolidation, we will likely retest the back of this back end of this as well, because it's close. And then I'll be looking for that 1 hour push up, followed by that 15-minute flag. And then I would filter that on the 5, looking for that risk entry within the flag. And then I'll be looking to get long up to here as a first target. And then, of course, be looking to target that significant higher time frame high. So that is dollar yen. Let's just move on, because I've got to get through this. So I've set an alert there just to see if we push back down. On euro dollars case, I've set a Google Calendar reminder to remind me to check that in a couple of hours time to see how it's looking. And on pound yen, in the case of pound yen, what do we have? If we just zoom out, so we do have this more significant high here, okay, which is partly sat just above, which is partly why this is lower down on the list. But you can see what happened last time around with this exchange of liquidity, and then we had a very aggressive sell-off with very little pullbacks on the way down. Look at how price sold off. And what I was studying at the weekend, I noticed that when that happens, that when we tap into an area again, we often sell off in a similar manner. Whoops. So if you look at what happened here, we kind of had this 1, 2, 3 touch. We got close. Price scooped back up to tap out some more orders. It moved to the downside, but once again, you can see it narrowly missed that area of value once again. Okay. So what it looks like price is doing is that price is coming back up to fill the orders. Okay, we did tap into it here by way of that wick. But what are we doing? We're scooping back up. Why are we scooping back up? Okay, this doesn't look indicative of a move to the downside. If we just measure this, you can see we've pulled back about 70% of the length of the move. That's not typical for a pair such as pound yen, or pretty much any pair really, if we're going to move to the downside. So what that gives me a clue, because we didn't break above, as I've said previously, we usually break above the highs before moving to the downside. That gives me a clue that we're likely scooping back up to break above this to catch people the wrong side of the market by way of what we call mass psychology before moving to the downside. So what I'll be looking for from this pair is the following. I'll be looking for price to tap into this area, but this time I'll be looking specifically for a break above. You can see we've already tapped into that area, but price did not find enough liquidity to send it to the downside. So what I'm looking for is price to break above, to tap out the orders. If it is going to move to the downside, to tap out the orders that were sat above this high, which is likely what price is needing to fill before the move to the downside. And then once again, I'll be looking for that push down on the 1 hour, followed by that 15-minute correction, and then I would filter that once again on the 5-minute chart. If I could, if this was structured, if the 15-minute chart flag was structured, looking for that risk entry, and then I'll be able to manage it down to this low here as a first target, which this low near missed 2 for something in the region of 4.5%. Okay. If this was if just to touch on it, if this was the more significant high, so if we'd tapped above the high sat just above that one there, then I would be looking for a 1 hour push down followed by a 5-minute flag. So that would be a flag that is visible on the 5-minute chart. Okay, and I would take that as an independent flag, and we don't take risk entries within 5-minute flags, but I would be looking to get short on the break of a 5-minute flag. But because we have that higher time frame high sat above, I'm waiting for just slightly more correct confirmation, so that I don't end up being tagged in and tagged out, and then it moves to that higher time frame high, if that makes sense. So that's what I'm going to be looking for, folks. I have an alert set just below the area of value. If these entries do not manifest themselves, then no trades for me. Thanks for watching, folks, and I'll see you again in the next video.